Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and we're about to review a Yahoo Finance article that is going to list several metro areas that they're suggesting that are going to plummet in value before the end of 2024. So this article is extremely spicy, and I already can tell you guys right now, you're not going to guess all of the metro areas. I've already kind of peeked in advance. I know it's on this list already. And to be honest with you guys, about 4 or 5 of these metro areas, it really surprised me that it's even on this list. But regardless, I want you guys to understand, like always, everything we review is macro data. If you want to know what's going on in your housing market, you can't look at mainstream media. You can't watch YouTube videos. You must do boots on the ground subdivision analysis. If the property you're interested in does not have a subdivision, then you have to do an analysis. Probably like, I don't know, just if it's rural, you can go up to 20 miles, but if it's not rural, 2-3 miles. You got to look at what's going on with comps. We are in an age right now, you guys, where we can't trust the information that is being provided to us. They continuously are manipulating the data and deleting price decline from the history books. Look no further than what they did with new homes. They erased it. And that's why I keep going back. It's you. You guys need to understand how this works. And the good news is, guys, is I'm trying to teach you for free, and it's simple math. But regardless, you guys know I'm not a financial advisor, even though my bio is someone that is about to bawl in tears right now, because this is my very last recording in the studio. You guys, it all happened right here. I just wanted to give you a big thank you from the bottom of my heart, my family. And I want to thank you. You guys have allowed me to teaching career to where I can afford to live and I can teach society. So thank you guys. This is a dream job. I really love you. I really appreciate you. I cannot do this without you. All I want is for you guys to be safe, and I want you and your family to win. But regardless, you guys, buckle up because we're about to get started. Now, this is a Yahoo Finance article, like I said, and the title is 10 housing markets that will plummet in value before the end of 2024. Now, this was dropped on Monday, June 24th. And seriously, guys, do me a favor before I dig in. Comment below and see if you can guess the 10 metro areas. I bet you can't, but I want to know if you can, though, seriously. And then if you do guess, tell me how many you got right. Okay, so you can do it in your head or whatever, but tell me how many you're surprised about, all right? And then comment below on what cities you're actually shocked that made this list. Now, I'm going to tell you, again, I'm surprised some of these metros are on this list. It hit me by surprise. But either way, let's dig in, guys. I think you're going to like it. Okay, so it starts. A lot of housing markets in the United States are up right now, but there are some that experts say are about to lose a lot value. This could be helpful to know if you're planning a big move or trying to find an affordable cost of living. I love it. Now, the first metro area that they're talking about is San Francisco. And honestly, guys, no surprise here. Obviously, they've had massive turmoil in San Francisco in 2022. Now, remember, home values reversed. They were going down in 2022, but they reversed almost immediately after the bank term funding program, or by the freaking put, as they like to say. Now, San Francisco, a city that has long been one of the most expensive places to live in the country, is about to have a drop, according to Ben Johnson, a real estate agent and CEO of Big Ben. Now, this is why he's saying, okay, the high cost of living without migration or people leaving that area, and a trend where most tech companies are allowing some workers to work remotely, has seen San Francisco's real estate market begin to fall. Home values in the city could drop by an estimated 5 to 10% by the close of the year. So let me know if you guys agree with that. Now, first of all, again, I believe San Francisco can see a higher drop than 5 to 10%. I think we got close to 20%, if I'm not mistaken, in 2022. You guys, when home prices drop, when it's an all-out crash, home prices actually can drop relatively quickly. But again, remember, each seller is different. There's different levels of distress and different levels of ability for sellers to reduce. Some sellers just can't reduce the price because they owe too much on the house. Now, the number 2 metro area, you guys probably would have guessed this one, is New York. Like San Francisco, New York City has seen a drop in home values due to the flexible work lifestyle imposed by the pandemic and the associated high cost of living. The rental market also gets softer following demand for residential property. The average home price in New York right now is $742,000. Now that could drop 5 to 8% by the end of the year. So far, guys, any surprises here? Number 3 city here is Honolulu. Personally, I am not surprised to see Honolulu on this list because, again, remember, Honolulu, I believe, was one of the top 10 metro areas of price decline in 2022. So those trends will probably continue. In fact, what's probably going to change in 2024 is there's going to be a lot more Florida metros. In 2022, I don't think we had any Florida metro areas that had price decline. So we're finally starting to see Florida unravel. But this is what it's saying about Honolulu. The average home price sits at almost $800,000. Now, by year end, they're anticipating that to drop 4 to 6%. So Honolulu's housing market is expected to simmer down with the tourism industry, an important pillar in the local economy, remaining out of gear. Now, speaking of Florida, look at this, guys. Number 4 is Miami. Thank God Miami's on this list. Am I wrong? Now, the average home price in Miami, you guys, is $579,000, which is up 8.7% year over year. However, they expect prices to go down before the end of the year 3 to 5%. I'm sure that's welcoming news for the natives that are getting absolutely crushed and are priced out of the market. Now, Miami's housing market is threatened by overvaluation and the steady rising sea levels, something that many property investors view as a reason for avoiding Miami's housing market. Further increased insurance, lodging, and proceeding fees because of climate change is making homes unaffordable. And you guys, property taxes are also a concern, but again, the insurance in Miami are really in many coastal areas in Florida. I've heard some stories where it's gone up 4 times the amount. So not even double, not even triple, but 4 times the amount. Imagine having an insurance of a premium yearly of $1,500 and that going from $1,500 a year to $6,000 a year. They don't have to imagine that because it's happening in Miami. All right, guys, number 5, Las Vegas. Absolutely no surprise there. I expected Las Vegas to be here for sure. Now, again, considering how Las Vegas relies heavily on tourism and entertainment, both hit hard by the pandemic, the chances are high that home value in that area will experience a drop. Right now, the average home price sits at $422,000, and that's expected to drop 4 to 7% by year end. I absolutely agree with that. In fact, I actually think it's going to be more in Las Vegas. I think we'll hit double digits in Las Vegas. But again, you guys, very difficult to know for sure unless we have access to MLS because they keep revising data on us. But so far, I think this is a pretty good list. Not too many surprises here. Let me know about you guys. Now, this one is a little bit surprised. Again, these are supposed to be the top 10. I didn't see Chicago being on this list. Let me know if you guys thought Chicago would be on this list. Now, Johnson believes that Chicago is going to go down because of high property taxes, crime rates, and a lack of population growth. Chicago's housing market may see a decline as population growth stagnates and the city faces fiscal challenges. The average cost of a home in Chicago is a little less than $300,000, but by the end of 2024, Johnson said that can fall 2 to 4%. Really cool to see Chicago there. Very, very cool. Again, I was surprised. Were you guys surprised by Chicago? Oh, dang, another good one right here. Seattle. Seattle made the list, guys. Now, this is what Johnson's saying about Seattle. Both high living costs and the shift to remote work in the tech industry are cooling Seattle's market. Home values could drop by 3 to 5% as more people choose not to live in the city. For reference, Seattle's average home price right now is $884,000. So I hope you guys are kind of seeing a trend here. So not only is the unaffordability going to unravel markets, but one big trend that we've seen so far is the lack of population growth. It's actually the contrary. Most of these metro areas that we've been reviewing, people are leaving them, and they're leaving them for multiple reasons. But when people leave the metro area and they have negative net migration, it's very, 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 very bad for the housing market. Because again, what we've learned through the pandemic is, dude, the migration is important. I mean, that migration, just like Boise. Boise is the perfect example. Like Boise was just off by its own, minding its own business, loving the affordable cost of living. And then all of a sudden, COVID hit. All the people from California rushed out there, got those tech jobs, and destroyed Boise. In other words, migration is very, very powerful, as is the job market. But again, guys, any surprises here so far? Let's move on to number 7. 100% no surprise. Austin, Texas is on the list. In fact, the only surprise here is that it didn't come on the list even sooner. I would have thought this would have been the first one they started talking about. Austin is what, about 3 hours from where I live? Now, this is what he's saying about Austin. A recent uptick. Actually, let's change uptick to explosion. A recent explosion in inventory and new construction, like I've been saying, projects have evened out the market between buyers and sellers and cooling off housing prices. This trend should continue for the remainder of the year, especially with mortgage rates increasing. Home builders in Austin predict a greater number of home sales resulting from the state of the housing market. Now, notice you guys, they actually did not give us a percentage here because they don't know. Austin is experiencing so many bad things. Some places net migration, but the job market right now in Austin is getting destroyed, especially with those recent Tesla layoffs. Austin's, again, the #1 metro area for the 3rd year in a row with price decline. Austin's getting creamed right now, but overall, still overvalued. Even with the losses in Austin for 2.5 years, it's still grossly overvalued overall. Now, Preston said the median listing price in Austin was $650,000 in May of 2024. That doesn't sound right to me. And the recent median sales price was $567,000, but that number could dip closer to $550,000 or lower by end of the year. Okay, guys, so number 9, St. Louis. Jeff M., that's right, your metro made the list. Now, personally, guys, I'm surprised to see this on here. I did not. The reason I'm surprised to see St. Louis on here is I would have thought they went to the Carolinas. Like I expect like Myrtle Beach, Wilmington, Birmingham, maybe Jackson, Mississippi, New Orleans, right? But St. Louis, are you kidding me right now? Let's see what he has to say about St. Louis. Preston said St. Louis home prices have dropped 2.2% since last year. Wow. Did you know that, Jeff? The city currently has a median home price of $221,000. That's still, see what I mean? It's still relatively affordable. I mean, we were just looking at metros with $700,000. So 221 is crazy low. Now he predicts it will drop to 200,000 by the year end. That's over 10%. That's crazy, guys. So he's expecting a drop of 10% in St. Louis. Didn't see that one coming. Now let's see why. There are typically multiple factors as to why market cools, but St. Louis has been experiencing an affordability crisis due to rising taxes in some municipalities. So he's saying rising property taxes. Really, still though, really surprised to see that on here. Now the last metro area, again, I'm surprised to see this on here as well. Washington, D.C. That's usually the last to go. So I'm shocked. Quite frankly, I don't know if I would agree with Washington, at least in 2024 and 2025, it would be different. But let's see what he has to say about Washington. Wow. Washington's housing market is predicted to decrease by a whopping 10.2% for 2024. A lack of buyers due to mortgage rates and economic issues are the main culprits. He said the median home price is $602,000, and that could drop another 3 to 5% by the end of the year. So when all is said and done, you guys, the housing market has nowhere left to go but down. We're seeing multiple factors now at play here that are basically unraveling housing market prices. And you guys, it's going to continue to unravel. I mean, one culprit that remains the same is the massive unaffordability. And it's not just because of interest rates. The interest rates are actually kind of the average over the last 20 years. You guys, it's the prices. It's always been the prices. The prices are the problem. And it's actually the low interest rate that drove up the prices. So we don't want low interest rates. What we want is to remain patient. We are in the largest housing market bubble of my lifetime. And I was a pro in the GFC. I was a loan officer during the GFC. Now, if they didn't keep kicking the can down the road, honestly, guys, when I first started this, I didn't necessarily think that this was going to be worse than the GFC. I initially thought that home prices would go down about 15 to 20%. But now that I understand so much more that's going on behind the scenes with the deficit spending, the government jobs, the inversion, the moratoriums on foreclosure, I now think that the collapse that we will have and the recession that we are going into, I think it's going to be worse than the GFC. The only thing that I am not sure of is how much worse all of that government printing made things and how much worse it will make things in the future. That's the only thing I'm a little bit confused about. But either way, you guys, things are going to change. If you're on the sideline, if you're patient, I'm praying for you to maintain your purchasing power. I know it's hard, but it's not impossible. And now if your purchasing power is unraveling, here's some hope, okay? It's better to have a lower purchasing power than to have no purchasing power, because even if we go into recession in 2025, you still have a year or 2 years that you can put yourself in a situation to buy. And my point is, never lose hope. Always remain in control of your finances. All right, guys? And spend money maturely. Please, will you please? Because I want you guys to win. Now, other than that, guys, I really hope you guys found value, perspective, and insights. And if you're out there investing in real estate, you guys already know I wish you luck, and I hope you win.